In this part of the presentation, I will address a number of queries from users as to how to do certain things in Xspouse that they could do in DissoMaster. The first item that I will address is where to enter details for the alternative minimum tax and the other settings on the taxes menu. Inputs for the AMT are found on the taxes menu under the aptly named alternative minimum tax data input screen. Several things to note here. A reminder that we need to have the cursor highlight in the input column for the party for whom we want to enter the data, in this case the father. The values need to be entered in monthly amounts, no matter whether the main program is set to monthly or annual inputs. We can enter adjustments for both California and federal AMT here. The federal adjustments for line 2G to 2T plus line 3 are added as a sum. While in the taxes menu, I'll quickly run through the other items on this menu. We have seen the tax settings tab item earlier in the presentation. The next item on the taxes menu is the party tax information. In this window, you can enter essentially the same information as you do on the Party Info drop-down input field in DissoMaster. Next, we have the option to include or exclude various federal and state credits in the Tax Credits Override submenu item. The last item for setting up the tax settings in this program is the selection of whether the parties will itemize their deductions or whether they will take the standard deduction. The default is to take the standard deduction, but if one party decides to itemize, it is necessary to set the other party to itemize also by closing the window, placing the highlight in the other party's input column, and reopening the taxes MFS deductions window for this other party. Now that we have seen most of the settings in Xspouse, I would like to show you how to do certain calculations that can be done in DissoMaster that we have had customer queries about. A number of DissoMaster users have inquired how and where to enter the California pass-through entity tax in Xspouse. In this example, I will show you how I would approach the question. The first thing to remember is that under the family code, child support is calculated on unadjusted guideline net incomes. These are the incomes prior to any adjustments to income resulting from payment or receipt of spousal support. So the PTE tax and tax credit are part of the party's income before spousal support is paid. In Xspouse, that means that we need to exclude spousal support from our initial calculations to arrive at the correct unadjusted guideline net for child support. We do this by switching the guideline deductible support to exclude in the settings screen. I will illustrate the steps to take with an example. Let us assume that an individual X's share of allocated profits from a California business that qualifies for and elects to pay the PTE tax is $100,000. On the federal K1, X's reported income is $90,700, which is the $100,000 less the 9.3% PTE tax. First, change the display to annual. Apart from the fact that we're dealing with annual income figures in this, it is advisable to use annual settings whenever doing anything related to tax calculations, as these are calculated on an annual basis. If we used monthly inputs, we potentially introduce rounding errors. To enter this data in Xspouse, we enter $90,700 under other taxable income. In this example, I will enter it as royalty income, though it could be entered simply as other taxable income. While in the detail window for other taxable income, I draw your attention to the bottom two rows where there are inputs for subtractions and additions to state AGI. Use these fields when there is non-conformance between federal and state tax codes that are not already automatically adjusted for, such as with spousal support. For the PTE tax calculation, we need to add the $9,300 paid at the entity level to the state AGI in order to return the state AGI to $100,000. If we now open FTB Form 540, we see that the federal AGI as $90,700 and the California adjustments as an addition of $9,300 and the state AGI set to $100,000 as we require. Remember that the PTE tax credit is a non-refundable credit, meaning that we can't have the credit exceed the state income tax due. To see what the state income tax is for the father, we toggle the right-hand side screen display to show state income tax, which we see in this example is $5,190. This is the maximum amount of the credit that we can take in this financial year, with the remainder of the $9,300 of $4,110 being carried forward to the next financial year. We enter the PTE tax credit of $5,190 as other non-taxable income. The effect of the PTE tax credit is reflected in the unadjusted guideline net income, which has increased by this amount when we apply the tax credit. We now reset the display to monthly figures to make it easier to see what happens next. The monthly unadjusted guideline net for father is $6,575 and the child support is $1,578. We can now reset the program to include spousal support. At this point, we have accurately calculated the effect of the PTE tax credit on unadjusted guideline nets for calculating child support and unadjusted spousal support. The unadjusted spousal support amount per month is $1,841. However, you will note that the state income tax due has changed with the inclusion of spousal support. At this point, you need to decide whether you need to update the PTE tax credit limit or not. I'll leave that for the accountants to decide. If we are to proceed further and calculate adjusted spousal support by iterating the credit limit amount, there are three things that need to be done. First, lock the unadjusted child support amount by selecting the User CS on the main toolbar. You'll note that when you select User CS on the toolbar, that the guideline amount is already saved as the User CS amount. Next, press the B key to change from unadjusted to adjusted nets. Thirdly, iterate the PTE tax credit limit amount by keying in the new state income tax due as the non-taxable income amount. And lastly, after 2 or 3 iterations, the tax due and the non-taxable amount will be the same. At this point, the spousal support amount is the adjusted spousal support. We are currently looking at implementing an easier input for the PTE tax in a future update to Xspouse that will automate the previous steps so that users don't need to manually do any of the iterations. If you compare this case with DissoMaster, be aware that if you use the 9.3% elective PTE payment field to calculate the PTE tax credit, DissoMaster seems to be treating the credit as fully refundable, resulting in significant differences in support payments. However, you can get around this problem by entering the PTE tax payments as other specific CA adjustments to income, then viewing the state income tax on the Guideline Cash Flow tab while the setting is unadjusted nets. In DissoMaster, the unadjusted net setting is the same as excluding spousal support in Xspouse with regard to tax calculations. and then entering the smaller of state taxes and the PTE payment as other non-taxable income, as in Xspouse. After that, you would need to take the same steps as we have in Xspouse by iterating the state income tax due and updating the other non-taxable income amount. So at the moment, neither program has a simple implementation of the PTE tax credit. Both require manual manipulation of the data to arrive at the correct credit and support amounts. Hopefully we can have this situation rectified in the next version of Xspouse. Another question that we have been asked by DissoMaster users is how to exclude spousal support from state taxes in Xspouse, just like in DissoMaster, particularly when dealing with net spendable income. Initially, I was somewhat confused by what DissoMaster was doing in having switches for making spousal support payments as deductible or non-deductible, and spousal support received as taxable or non-taxable for state taxes, and having the B key toggle for adjusted and unadjusted net incomes when both do exactly the same thing in DissoMaster. If you have a look at the tax forms, you'll see that in DissoMaster the unadjusted guideline net setting actually excludes spousal support from state taxes, which is what the tax switches do. This is equivalent to the Xspouse tax forms with spousal support being excluded. However, in Xspouse, when spousal support is included, spousal support is displayed in the tax forms even if unadjusted nets are being used. It simply means that the spousal support displayed on the main screen and the tax forms is based on unadjusted net incomes, so the tax forms and main screen display remain in sync at all times. Both programs calculate the same guideline net incomes, but when it comes to displaying taxes and support payments, the implementation is slightly different. This difference in implementation of the displays results in a slightly different approach when wanting to compare net spendable incomes when we make spousal support a non-tax item for California taxes. The reason for this is that net spendable income is defined as the unadjusted guideline net income minus the cost benefit, where cost is child support paid plus spousal support paid minus tax saving. The tax saving is the saving resulting from payment of spousal support. In Xspouse, you see this on the cash flow display by observing the total taxes value for the two spouses with spousal support included and excluded. Note that the amounts of child support and or spousal support will be positive for a payor, negative in the case of a recipient. Tax savings will be negative in the case of a recipient of spousal support because of it results in a tax liability. In the situation where we set spousal support as non-taxable and non-deductible in DissoMaster, there are no tax savings, so the cost benefit is simply the total amount of support. In Xspouse, because the tax form display remains in sync with the displaced spousal support on the main screen, to replicate the DissoMaster display for cost and net spendable incomes when spousal support is set to non-taxable or non-deductible, it's just a matter of realizing that turning off taxability of spousal support is a tactical maneuver. So we simply open up Tactic 1 in Xspouse and set the total support payment as the non-deductible support in the tactic details and press OK. When we return to the main screen, we need to be sure that there are no exemption releases being displayed, so we block them by pressing the E key. When we now view the proposed column, we see that the payment cost benefit and net spendable incomes are the same as in DissoMaster. If you use adjusted nets, Xspouse still uses the unadjusted net when subtracting the cost to arrive at net spendable income after adjusting Tactic 1 details for the new adjusted cost. In DissoMaster, I don't think you can do the same. In summary, if you wish to compare net spendable incomes between DissoMaster with state taxability excluded and Xspouse, in Xspouse use Tactic 1 and set the non-deductible amount to the total support being paid and block exemption releases if there are any by pressing the E key. The results will be displayed in the proposed column. Another question that we have been asked by a number of users is how to calculate out-of-state taxes. There are two ways to do the calculation in Xspouse. One is to use the actual tax paid, the other is to use the relative tax rate multiplier. I describe both methods here. To start this explanation, I'll set up a simple scenario in DissoMaster. In DissoMaster, we can enter a dollar amount for the other state's income taxes or use a multiplier. In this scenario, I will use a dollar amount of $5,000, which is 5% of the $100,000 taxable income for the father in this scenario. The case details are as follows. The custodial parent is mother. Her filing status is head of household with 3 dependent children, all qualifying for all of the child tax credits. She is a stay-at-home mum with no income. The non-custodial parent is father, lives in the other state. His filing status is single with no children. He has an annual wage income of $50,000, an annual other taxable income of $50,000, and an annual non-taxable income of $25,000. Health insurance annual payment of $3,000, timeshare of 30%, and the other state income tax rate of 5%. When we've completed the income and other child-related inputs, we enter $5,000 in the taxes on the taxes tab under the user calculated state tax amount. Once we have done this, the father's guideline net is $99,334. Note that in this example, we are using annual amounts and settings. I'm doing so as taxes are calculated on an annual basis, and if we use monthly values in the tax calculations, we would introduce rounding errors. To replicate this in Xspouse, we enter the same income and child details as in DissoMaster for both parents. To enter a fixed state tax amount in Xspouse, we look to the family code and note that taxes are a guideline deduction. Therefore, we enter $5,000 as an other guideline deduction and go to the tax settings and exclude the state income tax for California. And because we have wages income, we also need to exclude the state SDI. Once we have done that, we see that the father's guideline net is the same as in DissoMaster, that being $99,334 in this example. Although the above steps will work for all cases where the standard deduction is taken, we also need to cover the situation where itemized deductions are being taken. When we view the Form 1040 Schedule A, we see that for calculating the itemized deduction, we need to enter the larger of state income tax or state sales tax. In Xspouse, In the detailed input window for miscellaneous tax deductions, there is an input for state sales tax. Under normal circumstances, Xspouse calculates the state income taxes and compares these to the value entered for state sales tax and enters the larger to Schedule A. In the situation where we have an out-of-state tax amount and have excluded state taxes, we need to insert the larger of the other state's income tax or sales tax in this state sales tax field. In our example case, we don't have sales taxes, so we just need to enter the amount that we added as other guideline deductions for income tax. As I mentioned a moment ago, for cases where the standard deduction is being taken, it won't make any difference whether you make this additional adjustment. However, it is good practice to make this additional adjustment, as it ensures that you will cover any cases where the standard deduction and itemized deduction amounts are similar and may turn on this value being included. The other way to account for other state taxes is to use a multiplier. This is common to both DissoMaster and Xspouse. In this approach, we compare the other state's tax rate to that of California's to calculate the value of the multiplier to use. To do so, first exclude all of the California credits and exemptions on the tax credit override window. On the settings screen, exclude guideline deductible spousal support. This is required to prevent spousal support payments clouding the calculation of the base income taxes. Enter the taxable income for the litigant from out of state. This can be wages or any combination of other taxable income. However, note that if using wages, a state SDI multiplier needs to be entered if the other state has such an equivalent. If not, then the SDI needs to be set to exclude, which I do for this example. Toggle the right-hand side of the Xspouse screen to display the state income tax. On the right-hand side of the screen, toggle the display to state income tax, where we see that tax due is $5,339. The gross taxable income in this example is $100,000, made up of wages and other taxable income. The calculated effective California tax rate is therefore $5,339 divided by 100,000, which is 0.05339. The multiplier is the other state tax rate compared to that of California's, which is the other state's tax rate divided by the calculated California tax rate. In our case, the multiplier evaluates to 0.9365. We enter this value for the father as the out-of-state party under Taxes, Tax Settings, State Income Tax, and press OK. On the main screen at right, the total CA tax due now displays $5,000, which is exactly 5% as we wanted for the other state. We also see that the father's annual guideline net income is $99,334, which is identical to the guideline nets calculated by both DissoMaster and Xspouse using a dollar amount for the other state taxes. You can now switch spousal support to include and toggle the B key to see the adjusted and unadjusted net incomes. The advantage of using the multiplier approach is that it allows using adjusted nets, whereas having a fixed dollar amount entered as the tax for the other state does not. Once you become familiar with Xspouse, you'll find that the program is very flexible and can be adapted to handle most situations.